Okay, we are live now already.
Countdown, is it?
Yeah, it's the countdown timer. Please check YouTube and Twitter.
这样我还可以讲话吗？
可以。
很好。
But 我讲话的时候你不可以讲话。
OK。
你可以讲。
要举手讲话，举手。
Yeah.
因为。
我不。
Is the stream live? Or...
I can hear somebody talking. Somebody's talking.
Welcome to Expand Your Options, moving forward together in volatile markets. If you're wondering what is the role of exchanges in today's market and how industry leaders shape and move forward in the crypto options landscape, stay tuned. We have a series of panel discussions with speakers from Deribit, QCP Capital, Fourth Tech, DALI Technologies, Wintermute, and Ember Data, all of them at the forefront of derivatives trading. Hosted by Bybit, our esteemed panel of speakers will discuss, debate, and analyze the potential of the crypto options market. This panel session is happening live on YouTube and Twitter, so please make sure to follow us closely for more. We'll start with an outline of today's program. Our first panel discussion on moving forward together in volatile markets with speakers from Bybit, QCP Capital, and Deribit. We'll move on to a sharing session by speakers from Bybit and Fourth Tech on options. Lastly, we will have a final panel discussion on options versus Perpetual, which is more useful for crypto trading, with speakers from DALI Technologies, Wintermute, and Ember Data. Moderating today's discussion, we have Shun from Bybit and Austerity Stocks. To kickstart this event, we have our opening speech from Ben, CEO and co-founder of Bybit. Ben, please.
Stage? Hello?
Yes, you
Awesome.
are.
Yeah, awesome. Hi, everyone. Thank you for joining this amazing panel that we have hosted and prepared for you. as everyone knows, that Bybit is now 4 years old, and it has been a crazy long journey starting from late 2018. Bybit started off being a pure derivatives, mostly focused on perpetual contracts exchange, and we have expanded our product line through spots, and with the latest addition is our option market. I think this session kicks off a series of the 4 years celebration and also a series of panel and education focused programs starting from our option program. I think today's program is extremely exciting. We got amazing guests on the line. Many of you I have met, I have speak to in the panel before. Thank you for joining, and of course, all of our clients and guests who are listening in. I think for Bybit, our option market is extremely important to really kind of finish the whole portfolio of the market, and it's one of the most difficult market we have built. I'm sure a lot of the guests on the panel knows that as well. So I think we are one of the first linear option markets currently, and we are working dedicatedly on presenting you a fully portfolio margined product suites, meaning that clients will be able to trade our spot, futures, perpetuals, linears, inverse, as well as option, all packed in within one trading account and portfolio margin enabled. So with that enabled, I think a lot of the traders and also users on Bybit will really enjoy the product we offer and the liquidity we offer. So today, I think it's very exciting. I think you're going to hear a lot of good opinions on option and how to really use option market to wave through this current market, especially in the bear market. So very excited to be here, and thank you all for tuning in, and looking forward to see you guys again. Thank you. Back to you, Gladys.
Thank you, Ben. We'll now move into the first panel discussion, Moving Forward Together in Volatile Markets. Joining us as the first speaker in the panel, we have Hao, Head of Options at Bybit. He has extensive expertise in options trading and financial engineering. Before joining Bybit, Hao provided consultancy services for OKX options. Prior to that, he also worked as an options trader at Optiver and energy firm PZEM, respectively. Our second speaker for the panel is Simon, Head of Derivatives at QCP Capital, a crypto trading firm and a global market leader in options. He was previously the Global Head of Options at BNP Paribas and Standard Chartered. Simon is also an adjunct lecturer at the National University of Singapore, where he teaches applied trading. Last in the panel, we have Luke. He joined Deribit as Chief Commercial Officer, CCO, in 2019, looking after business development, sales, and products. Luke has an extensive background in exchange trading with over 15 years of experience. Before Deribit, Luke was responsible for listed products on the Singapore Exchange. Moderating this session, we have Shun, Business Development Manager of the Japan market from Bybit. Over to you, Shun.
Hello, everyone. Thank you, Gladys. So I'm Shun, and I'm from Bybit. So let's kickstart into the first session of today's discussion. The first topic we have today is trading behaviors from the different time zones. I would like to invite Yang Hao and Luke to discuss about the difference between the Asian timing and the non-Asian timing specifically. Can I please invite Hao to first share with us his thoughts on this topic?
Yeah, sure. Hi, I'm Hao. As introduced, I'm now heading the options business at Bybit. As you all know, that Bybit options is really, really young, and we're just almost more than half years old. We launched in April 25th, and we have been gaining quite a few attention and momentum recently. I think different from Deribit, our clients is more retail focused. There are, I think, less institutional flows still at the moment, especially, since we're based in Dubai and Singapore, a lot of flows actually come from Asian time zones. What we observe is that actually we have a lot of Asian whales that they just flush in and start buying options positions at market price and build huge positions over the day, and especially during the Asian times. That is the time when the market on Bybit is really active. That's just Bybit specific. For example, what we observed is during the last few weeks, we have people who flushed in within a day and traded over 100 million volume from a handful of guys, building up large positions during Asian hours. Besides that, the flow from other time zones are actually quite evenly distributed. What we observe is that there is equal options flow from either the European time zone or the US time zone. And Bybit specific market, there is a slight more volumes trading during the Asian hours. That's our observations in our quite young history since the Bybit options market.
Thank you, Hao, for your insights. Can I also invite Luke to share with us your insights on this topic?
Sure. Thanks for having me on this panel, first of all. Deribit is, I think, slightly different than Bybit. We were the first to focus on options in 2016 already. And back then, no one cared. Volatilities were crazy. The market was totally different than it is today. There was zero institutions back then. And over time, this developed. So if you look at where we are now, we have a massive platform and a lot of global activity. But we have a focus on institutions more than any other platform, I think. So if you look at our volumes, it's 80+% institutions and 20 or less retail. So we are less driven by time zones because our clients are everywhere and the institutions are also based. They have, like, let's say, follow the sun model. They can trade every time zone. So if you look at when trading happens on Deribit, because of this, we see less volumes in the weekends because the institutions simply don't work in the weekends. So if you look at market share, and especially if you look at our perpetuals, it significantly drops in the weekends simply because relatively speaking, we have less retail. If you look at the 5 days where we, let's say, dominate the space, it's predominantly following volatility. So it's not really when the clients are awake, but when the market moves. And when you track volatility, it's typically happening from 1 to 5 UTC. So that's evening time Asia, which is when the US wakes up. It's not because we have US clients, because we block them, but it's because US news typically drives the price of the market. So stuff like CPI yesterday, FOMC, the rate hikes, the other stuff, elections, and you name it. It's simply more important than any other country, which is what drives trading. So on our platform, we see that those few hours are typically more interesting from a volume perspective than, and therefore volatility perspective than others.
Thank you, Luke, for your sharing. So from what we have heard so far, it seems that there's a very huge difference between the characteristics between the retail users and the institution users. Can we please invite Simon to share with us your insights on this as well, the retails versus the institutions?
Hello, hi. And thank you for inviting me on. First of all, so QCP, we're in quite a privileged position. We're in that we see customer flow ranging from sort of private wealth, small wealthy individuals, all the way up through sort of crypto foundations, corporates, TradFi crypto funds all the way up to traditional macro funds. So we get to sort of and this is by design. We get to see a lot of different flows and also across the whole 24 hours. In fact, I thought sort of being an FX options trader before was a pretty miserable experience, but trying to trade 24/7 in crypto is is much worse. So in terms of activity across the time zones, it's very striking from our point of view. Our sort of hot spots are always the London Open, when a lot of institutional buy side come in, and the US Open, where you get a new round of institutional names that are active with us. And then, of course, as Luke pointed out, all of the US events. So, yeah, sitting watching FOMC last night was pretty quiet at 3:30 in the morning. In terms of retail versus institutional, in fact, sorry, let me just continue with Asia versus the rest of the world. Asia's always traditionally been a liquidity source for the rest of the world for options, right? And this is not just in crypto, but across a lot of TradFi markets. Definitely in FX, but also in equities and commodities. You typically see sort of yield-seeking accounts out of Asia, selling volatility, providing the supply, and typically the buyers would be the European and US hedge funds. When I was trading FX options, it was very marked. The sort of in fact the whole sort of global model was around buying Vega during Asia in order to sell out into the US and European time zones, and we see a similar sort of picture here in crypto. So we often see sort of not retail, but supply from individuals and yield-seeking accounts in Asia selling options, and then into the US, the crypto funds and traditional hedge funds will buy that up. And as a market maker, we just try and bridge that gap.
Thank you, Simon. To sort of build on the question, actually, we want to know what is your definition of a good options exchange? Like, what kind of points that we should look out for when we want to look for a good options exchange? Yeah, can we also get Simon to help share some insights on this?
Yeah, obviously, I'm very aware of the company I have on this wonderful panel. We know what a bad derivatives exchange looks like. We've got a very recent example. So yeah, number one is about trust. And that sits far above everything else. We've got a very long relationship with Deribit here at QCP, and we're building a very strong relationship with Bybit, I hope. So and that's where you sort of generate that's where trust comes from, and that's the most important thing by far. Once you go beyond that, it's about robustness. Trading derivatives is different to trading spot in that if the exchange goes, then that's your source of liquidity. So uptime is very important to us. The robustness of systems, the ability to connect in and know that we can provide and access liquidity at all hours is number two in our list of wants from an exchange. And then, of course, it's about liquidity, ease of use, the broadness of customers, the sort of value of the GUI.
Okay, thank you. Yeah, I think that would have been a better question. Like, can you point out what is the definition of a bad exchange? Yeah, I think that's the easier question. So actually, to build an exchange is extremely difficult, and I'm sure both Luke and Hao has their fair share of challenges and difficulties in building an exchange. Can Luke please share with us your challenges in building up Deribit to what it is today?
Yes, gladly. We've been around for quite a while, so we've seen a lot, and we've seen the market move, and we've seen total chaos and carnage, and we've seen the great days with amazing volumes, etc. So, I think the lesson learned is, and we. So first of all, we welcome competition that brings value to the market. So I think if you look at who's doing what, I like to compliment Bybit because we have seen platforms behave differently. So I think in the end, we are to expect, let's say 10x market growth or whatever, like a sizable market growth. And Deribit currently has 90+% market share, which is expected to reduce simply because the pie gets bigger and platforms like Bybit will generate volume. So in the end, the market will be much bigger than it is today, and there will be a few dominant players. So what's important over time, I think, what the lessons we've learned is the difference between a perpetual is like a few minutes product or seconds. It's an arbitrage product. It's a short duration trade typically, which means that you can leave whenever you please. If you have a big options portfolio like QCP and many others, you can't just leave. It's a trade, a portfolio that you enter for a long period of time. Our contracts date up to a year out, which means that, let's say QCP has all those expiries in their books, which means that if they stop trading, they will only be out of the position a year from now, unless they close everything now, which of course is expensive. So arguments like trust, is the platform trustworthy? Will it be there a year from now? Is a totally different argument than a spot platform, for example. If you trade spot, you exchange one coin in the other, and then you're done. You saw Jesse Powell, Kraken, saying you can withdraw everything because you only need to use the platform when you intend to use it to exchange something. In a derivatives platform, and especially in options, that's totally different because you can't just withdraw whenever you please. You're there to stay because the contracts remain open. So trust is extremely important. Proof of reserves and that kind of stuff. Is the management capable of handling and trustworthy of a massive position size? We have 10 billion in open interest, so we're large in scale, and you have to be able to cope with that. Then secondly, lesson learned is technically. In order to trade options, it's different than a single instrument. It's not Bitcoin moves and Cardano moves and whatever. It's Bitcoin moves, and because of that, like hundreds or thousands of instruments move, which means that all your market makers will send orders. All of them will require to adjust the prices simply because Bitcoin moves whatever, one tick, which means that the platform has to be robust and fast. It has to be low latency. A market maker needs to be able to send 1,000 orders in a second, and the platform needs to be able to process these as fast as possible, because if you don't, there's bids and asks at risk or at wrong prices in the books, and which puts them at risk. And if the market maker knows that they are at risk on a certain platform, they will quote wider, and hence you're out of business because your prices are not competitive. So those kind of arguments, I think, are the most important ones. Then lastly, margining. So the way you margin is also crucial. In these times of, let's say, stress and fear, people don't want to deploy more capital than they need. So if you charge on a per position basis, the aggregate simply becomes too big if you have a bigger options portfolio. You need to look at portfolio margin, and you need to reduce margins charged to, let's say, an appropriate level, because you take everything into account: the longs, the shorts, the perps, the futures, etc. and thereby reducing the capital requirements for the large traders. For a retail trader that buys let's say call because the market is going up until $1 million, it matters less. But if you have a large portfolio consisting of a variety of options positions, capital requirements, margining is critical to what you're doing. So as if the platforms don't have an advanced solution for that, the big traders and the big portfolio holders won't come because it's simply too expensive.
Thank you, Luke, for the very comprehensive answers. So how basically build up the Bybit options from zero? So let's hear his answers on what are the challenges of building a good options exchange.
To be honest, the options platform we built is one of the most sophisticated product we have ever built. I agree very much on the aspect of trust. In order to gain the trust from our clients, we're still gradually building it up. We have to show that we know we have the expertise to build a proper exchange. We know how to calculate the proper margin, and we know how to handle the client's positions with prudency. Whenever there is a liquidation happening, we have to show that we know how to best protect our users' positions, as well as to protect the entire Bybit's market integrity. All of this requires extensive financial engineering and extensive, sometimes very, very exclusive options-specific knowledge. The challenge I have built in the beginning is to translate those knowledge to our developers and telling them, hey, this is exactly what we need to do, like how the market makers behaves. For example, a market maker have to quote multiple strikes across multiple expiries. So when market moves, they have to adjust their price, and then there's a high burst capacity that we have to build our tax up to, and then that's quite different from from a spot or a futures exchange. So basically, we have to build this infrastructure from ground up and have to design it on the go. And when we present our market to when we present this Bybit trading system to the market, we have to withstand the test and gradually earning the trust from our clients. And I think we're doing a great job so far. We have withstood 2 times of extreme volatility spikes, and we handled the system and the client positions and marginings, clearing, settlement, market price calculation quite effectively and correctly. So yeah, we are still trying to gain more market-wide trust and recognition as well. But we do believe this options product will gaining more market share in the future as well. And we're working really hard trying to attract and educate this crypto ecosystem by highlighting how one can use options, how can options better help other people to understand the risk and return perspectives, how you can shift from a degen mode to a more calculated risk takers. Education is also one of the most difficult part of building an options platform. Institutions and wealth managers, they are inherently know more about options and non-linear products, but not retails, not newcomers. We saw that Perpetual is trading 100 times more volume than options. I think there are several reasons, which I may talk about later in my presentation, but that also hints at that people in crypto still needs more understanding and much more education about how to use options and how options can help them in constructing their portfolios and in helping them to either generate yield or speculating on directions, and how it's effective or can be a parallel choice comparing to highly leveraged Delta One products. These are all the endeavors we're trying to do at this moment, besides keep polishing our technology and our financial logics within Bybit platform.
Thank you, Hao, for the sharing. Yeah, so we are very excited to see how this baby blossoms into a full-blown adult, in the future. So the third topic we have the future outlook of crypto options and how we together, Deribit, Bybit, QCP, how we together can move the market forward. Yeah, so that's the next question we have. Can I please invite Simon first to share your thoughts with us?
Yeah, this is a particularly difficult question. I think we sort of where we sit right now after the beating that crypto has taken this year, the reputational damage with exchanges disappearing and major market participants disappearing as well. It leaves the outlook more fuzzy for me, at least, than it's ever been. I sort of see two sort of alternative futures. One is where we sort of drift off into an extended crypto winter or ice age even, and we've been there before. The other is the sort of sharp bounce back and quick recovery, which we've also seen in crypto. Regardless of which direction we go, I'm confident of the growth of options. QCP started its options activity with Deribit in the middle of the last crypto winter. So 2017, 2018, after the big crash, when a lot of market was sort of trying to find its way. But in that sort of market, there was a lot of demand for yield-based products. There were a lot of hodlers who sort of looking to sort of do something with their assets, and options provided a good sort of tool in a market that was no longer sort of whipping around by 10% a day. I think that's I think that's where options come in particularly useful, right? If we're in a sort of rangy market, if we've got a sort of longer term bullish outlook, but sort of unclear in the near term, and especially right now with realized vols so low, it's a great way to generate yield and put those assets to work where there's it can be difficult to find other venues or trusted venues to generate yield from. So so on our side, we've put a lot of focus now into the sort of the next iteration of options, which I think will be the sort of development of more structured notes, exotics, things like ARKOs and such like, providing more choices for customers, and all of that will just generate more and more volumes on the interdealer market and on the exchanges to hedge those, and at the same time create opportunities for buy side to take advantage of cheap volatility. And the flip side is that if we do see this sort of strong recovery and the sort of reemergence of TradFi into the market, then everything's there. We've got the liquidity is all available, and the market's matured massively in the last sort of 12 months, I'd say. The behavior of it is much more robust, it's much more reliable. So I think we can see quite a sort of dramatic increase there in activity. But yeah.
Okay, thank you, Simon. Can I also please invite Luke to share with us on how should we, collectively build up the size of the pie so that everyone gets a larger slice of the pie, moving forward.
Yes, I'm particularly bullish about that part. So I agree with Simon. The winter, the ice age, no one knows how long it's going to take. I do think that the price is keeping up quite okay. It's not total carnage out there. But whether it rallies back to very high levels soon, I don't know. But regardless of the time it takes, I'm very supportive of the, let's say, the building blocks we're seeing. So when we started out, it was tiny, and in, let's say, 2019, you saw the hedge funds coming, like the small digital asset focused funds, and which boosted, at least in our case, the open interest and the trading activity. What it needs to become like a properly evolved market, 10 times bigger than we are today. Looking at ratios of developed markets, future spot and options, we're underperforming, so it needs to be much bigger. But as a platform, you don't get there on your own. You need quite a lot of building blocks. What you see now is the emergence of prime brokers, the people in the middle that provide the funding, provide the connectivity, provide margin offset amongst platforms. You didn't have that before, so that's like getting up to new standards. What you need is retail. What you need is education, so like a joint effort to make people understand what it is, what is the impact of volatility. If you pick the direction right, so you think the market is going up, you buy a call, you can still lose money if the trade or if the price moves in the right direction because of volatility moves, for example. People need to understand that, because if they don't, and they don't realize why they're losing money or why this particular trade went wrong, they will never come back. So education is like critical, because it's a more sophisticated product. It's more complex for people to understand. Then the let's say the convergence of new stuff. So in Asia, particularly, the structured product space is very big. Europe as well. The Swiss banks, if they get involved and package options into new stuff, capital protected stuff, an option with a bond or whatever, that kind of stuff combined is very powerful, because it's really big. The wealth space of private banking and asset managers, they love to use those kind of products to generate additional interest. It's more simple products using more complex building blocks. Stuff in the middle, vendors, making sure that the data is sent across the world as fast as possible. Data vendors, so you have Genesis, Volatility, Amber Data coming up later, is key to make people understand where products are trading, are there differences between markets, etc. And that's what's happening now. So people are starting to focus. I think a lot of people realize the potential. If you look at some of the big options markets, so the Netherlands is rather big, but also countries like Brazil, like India, of course the US, Hong Kong, with their warrants, etc. All of those people should like options because of their traditional mindset. So if you traded Nifty, Kospi, whatever before, very large contracts, and you're into crypto, you should like crypto options as well, if the market is properly evolved. And that simply will take time. So a joint effort in reaching these people and offering them like a high quality solution will boost activity level across, and that will empower a few platforms to become very large, I believe.
Hope we can see some tulips options in the future.
Yeah, it didn't end well.
Yeah. Last but not least, can we also invite Hao to share with us his take on this topic?
Yeah, but before I start, were there actually tulip options? Like back then, there were no tulip options, right?
I don't think
futures.
Yeah, there were. I read one time there were like olive oil options. That was something the first a few thousand years ago. That was the first bilateral contracts, but I don't think there were tulip options.
Okay.
You could get leverage on tulips by pre-purchasing. That's one of the one of the big drivers of the bubble, actually.
Yeah, it was back then. It was only futures, right? Everything started with Perpetual and futures, and then
not really
with
Perpetual,
options.
Yeah.
Well, yeah. Anyway, so what we did at Bybit, so we're kind of focusing on two things. We want to educate the market. We want to educate our users about how to use options and how you can gain simplicity from these complex products. But what we find is that as a exchange operator, we are lack of manpower to actually try to educate people ourselves. So what we do is that we want to collaborate with community builders. We have known quite some guys, for example, Greystar Live here today, and some other people who are really good at building communities and be the educator themselves. And they, the community builders, they are able to educate and translate complex informations in a way that other newcomers would understand. So we are trying to support the community builders, and we work very closely with them to educate and tell people what options really are, besides our own educational effort. That's the one thing we're doing right now. And the second thing is also to create simplicity from complexity, meaning we want to build simple to understand products and, for example, structured notes. That's a quite popular in Asia, as we all understand. For example, the dual currency investment, which was translated from traditional markets and first invented by Matrix Port, I think. And other innovations which are based on crypto options. We are exploring other opportunities, other directions as well. For example, we have rolled out this shark thing, which is basically also combining options with yield generating futures or perpetuals. With those structured products, we present a simpler form of investable products to the retails and telling them, hey, this is the structure you can get. But what we did behind is using options or nonlinear products to create structures and present a simple form to retail users. And that's also one of the endeavors and one of the directions we are collaborating and pushing forward with our community builders as well at this stage.
Perhaps I can just add. This is, sort of education and working with clients is basically what we do at QCP. So, we apart from provision of liquidity, where our main focus is working with customers and trying to sort of remove, I think Hal put it very well, remove some of the complexity and hold hands, guide our customers through the process of putting on option strategies, trying to make what could be a complex process as simple as possible. These are the risks, this is the yield, this is the potential upside, this is the downside. And the whole purpose of building structured products is essentially that. A lot of these can be synthesized with vanillas, but the role here, or the job here, is to take complex combinations of options and explain them as sort of simple products with clear objectives and clear risks. So our sort of teams focused on working with customers to explain that and execute strategies.
Thank you, Hao and Simon. I remember about 10, 15 years ago when the Rich Dad Poor Dad, this book, when it came out, there used to be a lot of gurus who are promoting options, like stock options, how you can 100x your capital. But I haven't really seen such gurus in, promoting crypto options. So maybe that's what we're missing out, because these guys, they have the ability to sort of, explain very simply what are all these complicated products. Yeah, so hope, these guys, they come back.
Well, actually, I hope those guys don't come to options. Well, you actually need to understand options and take prudent risk, management in order to really help people to make money in options. we want to grow the pie. That means we want to everyone who trade options to actually achieve their goal, either to generate yield or protect themselves or speculate. But you have to speculate at the right time. That requires you to understand volatility, understand what options really are, and we saw quite a few guys who can actually doing this, but the education is complex and difficult. We do not hope to bankrupt our clients. A bankrupt trader pays no fees.
I
don't worry how,
100% agree with how the challenge here is to build a sustainable market, right? It's and anyone that's offering 100 times 100 times easy money, it's a scam, and we've got too many of those in crypto. We don't need it. There are enough opportunities to generate yield, to achieve objectives, to hedge exposures without going to that level.
I think the great benefit these people bring is new ideas. So in certain market circumstances, a certain trade is interesting, and the next month it's the terrible idea. So the end investor should educate him or herself first to understand the basics in order to be able to interpret these ideas. So some of them might be great, but you should never simply blindly follow whoever you see on YouTube or television if you don't properly understand it. So if you're taking a binary risk, it either goes well or wrong because some coin might move in the right direction. It's a more simple trade. But if you're following a more complex strategy, simply because someone tells you to do so and you're clueless what you're actually doing, that's doomed to fail. But if you have the basic understanding, because you educate yourself, because there's plenty of stuff out there on Deribit, on traditional pages. Understanding options is not as complex as it seems, but it's if you understand like the basic concept, you can understand what these gurus are telling you, and then you might actually have some great new ideas that will result in profits.
Yeah, thank you, our three guests, for sharing this. The reason I mentioned this because I was one of the lemmings who paid 1,500 to the gurus, and yeah, I still remember what is alpha, but I forgot beta and onwards. Yeah, I only remember alpha. So with that, we have reached the end of the first segment, and I would like to pass on the mic back to Gladys. Thank you.
Thank you.
Thanks.
Thank you, Hal, Simon, and Luke for your insights, and thank you, Shun, for moderating. We'll go into a 5-minute commercial break before moving on to our next session, Keynote presentations by industry experts. See you then.
Want to move crypto from your wallet into Bybit? Here's how you can do so via our webpage. Deposit through our spot account. On our homepage, head to Assets to reach your spot account. Select your currency and click Deposit. You'll be directed to your Bybit deposit address. Here you can either scan the QR code or copy the deposit address and use it as the destination address from where you are sending the funds. Check that you've selected the correct chain type before proceeding. Some cryptos like EOS or XRP will also require you to fill out your Bybit UID as a memo or deposit tag. This ensures that your transfer reaches your trading account successfully. A word of caution here: if you transfer any crypto other than the selected one to this wallet address, your assets will be lost forever. Deposit through Buy Crypto. You can also deposit easily through our Buy Crypto tab. Either select Express and choose Deposit, or head to Crypto Deposit directly. Choose your coin and fill in and verify all your deposit details before confirming. Checking your deposit. In your spot account, you'll find a record of all your deposits under History. Depending on your miner fee, as well as the transaction condition on the blockchain network, it usually takes around 10 minutes for your deposits to arrive in your Bybit account. If your deposit is unsuccessful, don't worry. Our customer support is here for you 24/7. And before you deposit, check out our Rewards Hub for any deposit-related tasks you can complete to earn rewards. At Bybit, we always have something extra to sweeten your trades.
Want to buy USDC perpetual contracts, but don't have USDC yet? Here is how you can easily fund your USDC derivatives account through your Bybit spot wallet. At the top right corner of the Bybit homepage, click on Assets and select Spot Account. Here, there are two ways you can fund your USDC derivatives account. First, select your preferred coin and click Transfer. In the Transfer pop-up window, select the account from which you would like to transfer funds out from into your USDC derivatives account. Enter your desired amount of USDC, and the real-time exchange rate will update the estimated amount of USDT required for the exchange. You can also transfer USDC directly from your spot account instead. Alternatively, at the main page of your spot account, select an account to transfer from and click Transfer. A similar transfer pop-up window will appear. Select USDC derivatives account. Enter your desired amount of USDC to confirm, and you are done. It's that simple. Your USDC derivatives account is now funded and ready to trade.
Welcome back. We'll now move into our keynote presentations. Our first keynote speaker will be Hao Yang, Head of Options and Principal Product Director at Bybit. He will be talking about growth in crypto options. Hao, please. Hao, you're muted. Can you unmute yourself first?
Oh, okay, sorry. Yes. So from my perspective, I'll be talking about the road of growth of options and how Bybit is trying to facilitate and grow this entire crypto options marketplace. Let's jump in. We have three major talking points that I would like to share with everyone. So the first is why today the crypto options is only a fraction of the perpetual volume and the Delta One products, and how we can change the current landscape and where options growth can come from. And the roles of CFIs, for example, what Bybit is trying to do to grow this market. So in comparison, in the traditional finance or in the non-crypto markets, options is actually a huge part of total number of derivatives traded. Almost half of all the derivatives volume is actually from options, and the other half is actually futures. But that's quite different in the crypto landscape. In crypto right now, we're trading around 1 billion in total daily volume on the option side, but almost as much as 100 billion in daily volume, all the futures and perpetual products combined. So for crypto, options is still just a fraction, and in terms of both the volume traded and of its potential, a fraction of the potential it can achieve. If we're thinking about the a proper landscape that's quite similar to what traditional finance or non-crypto finance is, we should at least see 10 times the growth of all the options market volume right now. But we're still not there yet. There are several reasons from my experience I would like to share with all of us. Just my humble opinion, there are 4 key elements which are lacking or which are still building, trying to expand this marketplace. First of all, lack of infrastructure and competition. My idea is, obviously there is only a handful of crypto options marketplace that are up to the standard to provide a proper trading experience for both the retail and the more sophisticated institutional traders. There's only Deribit and Bybit and a few handful others who are able to build up the difficult infrastructure required for crypto options trading. As we mentioned in the previous panel discussion, to be able to handle the volume and the burst capacities, we need rigorous financial engineering and technical setups. To be able to handle the high burst capacities, we need parallel system that people and the trader should be able to send in batch orders. Sending burst requires within one request, the trader should be able to change at least up to 20 orders in one go. In that way, this is the best way to provide the market makers when they're quoting for options, and this is the best way to gain and attract liquidity on this market. And to get there, the engineering effort and technology build up is very, very difficult. We have spent several iterations and worked days in and day out trying to achieve the required technology setup before we're even able to roll out a proper options exchange. Well, that's the first thing. It's really difficult to build up a proper options infrastructure. And right now, not a lot of people can be able to hold up the high standard in options exchange required. And second thing is the market still need more education, and the leverage people can gain from Delta One products is insanely high in crypto. For example, you can easily leverage gear up to 100 times leverage with trading perpetual products. One of the uses for options is obviously gaining more exposure to have more capital efficiency when you try to invest or buy underlying assets. But the same need, the same requirement can be met with highly leveraged Delta One products. We are also trying to compete, trying to educate the masses of the users of options. And I genuinely believe options or trading options can offer a better alternative to help all the traders to have more prudent risk and reward ratio, and help every one of us to be more having more control over his own trading styles, not to be leveraged in just one or uptake or a downtakes. Trading options, when actually, for example, you're an options buyer, the maximum amount you can lose is actually the investment, the premium you paid for the options. But for example, if you're trading Delta One products, especially you're trading Delta One products with cross margin, then that means your entire account is actually at risk. So buying options is actually one of the better ways to manage risks. That's one of the things that we need to educate the market. But that's still not quite there yet. And the competition from Delta One products, from highly leveraged perpetuals, is still strong. And then that's the third point that I want to talk about, to understand options. In general, the crypto started as a grassroots financial rebel against the centralized system, and most of the people here are started as cyberpunks, and basically people less sophisticated than Wall Street traders. So options is quite a new concept for most of us, and to understand why options can be a powerful tool in protecting themselves, and how options can help people to gain better leverage or have more control over their capital, and how to properly use options. These are all the hurdles and challenges we're facing. And from our experience, traditional way, like the normal way of education, does not work very well. We can write down all the articles and people lose interest in learning or understanding the basic the concepts. So what we're trying to do, we're trying to collaborate with community builders. We're trying to educate people step by step, trying to show how options really works. And that's all the effort we have been trying to provide to move this market forward. And the last thing, I think, the potential of options is still not there yet. From the complex nonlinear products, we can build a lot of structures. For example, the dual currency investment, we can translate complexity into simplicity. We can offer people simple, understandable products that can be based on options. And those products, we can have more varieties and more forms, and we're still trying to rule them out, and effort, trying to make more effort to push this product forward. The endeavor or the growth of options, I think there may be several aspects that we can gain from. First of all, the majority of all the options volume is still traded on Deribit. But there's a catch. All the products traded right now on options, almost most of them are inverse products, meaning you have to settle Bitcoin with Bitcoin options with Bitcoin, Ethereum options with Ethereum. That's adding a complex layer to the already very difficult to understand products. So what we did, we built a linear options marketplace, everything settled in USDC and priced in USDC as well. If we compare the inverse and linear products, even in the Bybit market itself, our linear products is trading 10 times more than the inverse products. If options are to follow suit, then there is at least 10 times the growth within this market. On the other hand, we also see there is a flourishing of DeFi yield generating vaults that's adding real value and providing yield returns to crypto investors. To name a few, Ribbon or others, they are the first movers in building a DeFi yield generating products based on options. quite respectful endeavors, and we are trying to learn and collaborate with DeFi vaults, sometimes even generating new ideas on how to better manage the yield generating strategies. That's everything. That's all other things that we are trying to do right now as well. The other thing that maybe is that given the recent events, that we may understand high leverage and high risk degen mode is not the way that we can move this industry or this ecosystem forward. Maybe the overall sentiment will shift from a highly leveraged or YOLO style to a more prudent and careful investment styles. When we face this change, options can help people to better manage and to help people understand risk and use options as an alternative to gear up, to be more prudent in risk management, and options is a much better fit for such needs. The way we are trying to facilitate growth is, first of all, obviously, we're trying to build up a capable infrastructure to handle all the volume and the flows from our market makers, and to provide enough liquidity, to attract enough liquidity providers to give better prices for all options traders. That requires we have to build a capable, powerful, robust infrastructure that allows market makers to be comfortably providing prices. That's the first endeavor we're trying to make. And second thing is an innovative and retail-friendly products. We are trying to develop some innovative products, which is still in stealth phase. We will be rolling those out in the next year, in 2023. I hope those products will be able to facilitate and to boost the next leg up on the options marketplace. The last thing we're trying to do is obviously education and market awareness. We're doing podcasts, Twitter live and YouTube live, trying to educate people and to gain more market awareness by ourselves, as well as collaborating with community builders. That's all the things and efforts we've been trying to do as Bybit and as our co-builders, trying to move this ecosystem forward to gain real value to both the ecosystem and to the real world economy. All right, that's all. Thank you, everyone. Hand back to you, Gladius.
Thank you, Hal. We'll move on to our second keynote speaker, Coco, Head of Strategy at FothTech. Coco is the Head of Strategy, and prior to that, she spent 3 years working in South Europe as an investment officer at an international investment corporation. The topics she'll be covering today will be crypto options, market features, and investment value. Over to you, Coco.
Okay, thank you. It's my honor to be speaking here, and I'm very glad to share my topic with you. And then today I'd like to share and talk something about options, but not that complicated content like all the guests talked about before. I'll just give out some personal views and some some basic knowledges with you. As I know, the time is short, so I intend to keep this brief. Let's start. Options first originated in the American and European markets in the late 18th century, and in the late 1920s, and option dealers doubled as professional option traders. As a result, they only provided calls and when the pricing was to their advantages. Because of this and other factors, liquidity was highly limited. and this problem was not rectified until April 26, 1973, and when the Chicago Board Options Exchange began providing unified and standardized the option trading. Until then, and each broker had its own set of rules for trading options. So this might be difficult for investors to compare and evaluate different option contracts. And Cboe provide a centralized marketplace where investor could buy and sell standardized options contracts with predetermined terms and conditions. This allows for better liquidity and more competitive pricing and greater transparency in the market. So let's take a look at this chart. And thanks to standardization, options can be easily traded on exchanges. Option trading on exchange that adhere to a set of standards are often referred to as exchange-traded options, which not only improve transaction efficiency but also reduce transaction costs and makes it easier for investors to compare prices. And in addition, standardized option contracts are more transparent than over-the-counter options, and which can help reduce counterparty risk. So let's talk about what are options real. What are they real are? Like, take a look at this chart. Options are a type of financial derivative, we can call that, and that give the holder the right but not the obligation to buy or sell the underlying asset. That means you have the right to choose buy or not. And the profit and loss characteristics of options trading are quite different from that of swap trading. Options can allow traders to benefit from price movements without having to take on the same level of risk as when trading the underlying asset. And options can also provide leverage and allowing traders to control a larger position with a smaller amount of capital. And here we show the profit and loss outcomes for the four types and call and put options. Investors can construct change their trading strategy and or manage their risk using various combinations of these options. Like options are often used to hedge against the risk as an alternative to buying or selling an underlying asset outright. So, in my opinion, like options for risk management is very fundamental instrument for risk management and for risk assets. Although some investors might be proud of their complexity and the distinctive profit and loss structure make them both flexible and valuable. And this complexity keeps many retail investors away, like make them nervous and even make some many institutional investors can find it very difficult to get started. So as an example here, consider the cover call strategy shown in the diagram. And a cover call is an option strategy in which an investor holds a long position in an asset and sells call options on the same asset in an attempt to generate income from the premiums received from the sale of the option. And the investor is said to be covered because they have the underlying asset. So if the option is exercised, they can deliver it to close out their obligation. And this strategy can be used to generate additional income for investors who are looking to benefit from price movement without taking on additional risk. I've chosen the three most famous cryptocurrencies in the world. That's the Bitcoin, Ethereum, and Tether, the most favorite derivatives. Let's take a look. Like the exchange Bitcoin featured open interest. What to say? Like so far, a variety of financial derivatives have been created for digital currencies. And the most common and accessible derivative is the futures contract. I can say that. And a future contract is a binding agreement between two parties to buy or sell an asset at a predetermined future date and price. In the world of digital currencies, this usually refers to buying or selling of the underlying digital currency itself. And since inception, a number of cryptocurrency futures market have been very active. As of December 4th, and the data from CoinGlass, like in this chart, showed that a total number of Bitcoin contract was like over 600,000, which cost is almost like 10 billion US dollars. That's really a lot. Let's move to the exchange Ethereum futures open interest. And for Ethereum, the total number of Ethereum contracts on the entire network, as for December 4th, was like around 5 million, which is equivalent to about 5 billion US dollars around. So overall, transaction volume in these futures markets has been very, very high, extremely high, and is still growing steadily. So how about total Bitcoin open interest history? In the past 2 years, there has been an increasing amount of institutional participants entering the crypto space, and we are very pleased to see that the trading volume of options has also shown strong growth. And also, as for the same date, like the last piece of the presentation is as for the day 4 of December. Also, the data from CoinGlass platform revealed that the total notional position of Bitcoin option was like 300,000, like very equivalent to about 5 billion US dollars, or about half of Bitcoin contracts trading volume. And for Ethereum, same day, the notional position of Ethereum options is like 4 million, around 5 billion US dollars. It's really huge. So, like the rapidly growing volume in option trading corresponds to a certain implied volatility, which has remained very high compared to traditional markets. The 6-month implied volatility of Bitcoin options stays between 60 to 80 all year round, and while the 1-month implied volatility of Ethereum options has reached very high as 180. So compared to digital currency market, the implied volatility for traditional market is much more tame. And for instance, the US stock VIX index picture above for the past year shows that a very high point of about 39, and with the lowest point occurring around 16 on average. And the US stock VIX index hovers around 20 years around. So the high volatility of the digital currency market makes the quotations in the associated options market generally higher than those of traditional options, I can say. And higher quotations attract more sellers to participate, and thereby promoting more effective pricing in the spot contract markets. So here's a chart showed unbalanced put-call ratios. So the put-call ratio is like a measure of the numbers of puts divided by the number of calls, and the ratio helps traders gauge market sentiment. And a high put-call ratio indicates that there are more puts than calls, which means the market sentiment is bearish. And a low put-call ratio indicates that there are more calls than puts, which means that the market sentiment is bullish. So let's take a look at the US option market volume summary. And okay, give me a second. In the high volatile digital cryptocurrency market, options are very useful tool for risk hedging. And options can also be used to form strategy that can take advantages of high levels of volatility. And some of more common strategies that are the protective put, covered call, and caller strategies. Like many strategies, those involve owning, buying options alongside spot trading. And these types of strategies have several advantages over simply owning the underlying assets. There have 2 points. The first is significantly reduced impact of volatility and minimize potential losses. Like, for instance, using a protective put strategy, investors can guard against the potential losses due to a decline in an asset they own. And by selling call options or buying put options, the downside risk of owning the associated underlying asset can be effectively hedged against, and there be reducing portfolio volatility and minimizing potential losses. While the second part is improved portfolio yield. Let's consider the covered call strategy. A covered call is an option strategy that involves buying a stock and selling a call option. And the goal of this strategy is to generate income from the options premium while still owning the underlying stock. And similarly, a caller strategy is an option trading strategy that involves buying a put option and selling a call option. And both of these strategies limit potential large upside gains but result in a more stable rate of return, are less susceptible to volatility, and have overall lower risk profiles. So let's take an example. And this is the end of June, and our trader is a long September futures contract. He believes that the market will be quiet and stable through July, and after which he believes that the market will rally tremendously. He could hold his September futures position to expiration, but instead he attempts to generate income by selling a call option that expires before August. And so he sells the July 100 call for only $5. And since he already owns the underlying asset future contract, his positions will be aggregated. And this is the payoff profile for the long September futures contract. And then he received the 5 from the sale of the 100 call. And so the future contract, the break-even point is lower by $5 to 95. But because he sold the call and his upside potential is capped, he forgoes profit if the underlying market is above 105. So the long September future contract and short July call combined have a payoff profile as shown. His profit is capped at only $5. And from the sale of the call and through July expiration, this is because he needs to deliver the futures contract into the short call. Okay, after this, I hope this have given you some ideas of what to do with the options in crypto market. If you would like to discuss more about the options and quantitative strategies, you can just reach to First Tech. So I'm very glad to be here today and share my thoughts with all of you. And now go back to Gladys. Thank you.
Thank you, Coco. This marks the end of our solo sharing presentations by Hao and Coco. We'll jump into a 5-minute commercial break once again. After the break, our final panel discussion today on options versus perpetual will begin. See you then.
If you're a diligent trader managing a balanced portfolio of hedged positions, Bybit's portfolio margin mode will allow you to enjoy significantly lower margin requirements with higher leverage. While regular margin is derived from individual positions, portfolio margin instead calculates the required margin for your trade based on the overall risk of your hedged portfolio. When active, portfolio margin mode uses financial models to derive the overall risk of your USDC derivatives portfolio by offsetting long and short positions in perpetual and options contracts, evaluating the range and changes in the mark price, and market volatility of the underlying asset. From our homepage, head to USDC Perpetual or Options, and click on the Portfolio Margin icon at the top right corner. Before enabling it for the first time, you must meet the following requirements. Maintain a minimum net equity of 1,000 USDC, no positions in your USDC account, and no active or conditioned orders under your USDC account. Click Confirm and you're good to go. Level up your USDC trades with Portfolio Margin Mode now.
How do we place an options order on Bybit? At Bybit, we offer options using USDC as collateral. If you've not traded options before, you may find it very different from our spot market. But fret not, we've got you covered. Here's how you can get started. Head to USDC Options by clicking on Derivatives at the top of our homepage. At our USDC Options trading platform, there are two main sections. The Options chain, where you can buy and sell options, and the Summary tabs, where you can view details about your options trades. On the Options chain, you can view calls on the left and puts on the right. In the middle, strike prices are displayed. Calls are options contracts that give you the right to buy an asset at a set price on an expiration date. Puts are options contracts that give you the right to sell an asset at a set price on the expiration date. And if you choose to exercise the option, the strike price is the price you can buy or sell the asset at. The expiration date is the date your options contract becomes void. Bybit's USDC options are European-style options, which means you can only exercise your right to buy or sell the asset only on the expiration date. To place an options order, you'll first need to choose an expiration date from those listed at the top of the options chain. Next, choose between a call or put option. In both the calls and puts sections, there are bid and ask columns. These columns display the prices at which traders are willing to buy or sell options contracts. The rows with green watermarks are in the money options, while the rows that are not highlighted are out of the money options. For call options, in the money is when the market price of the underlying asset is above the strike price. For put options, it is when the market price is below the strike price. For call options, out of the money is when the market price is below the strike price. For put options, it is when the market price is above the strike price. To buy a call option, click on the call option on the left of your desired strike price, and the order placement window will appear. Meanwhile, to buy a put option, click on the put option on the right of your desired strike price. Here you'll be able to view important details and fill in the parameters of your order. The option name tells us the underlying asset, expiration date, strike price, and option type, put or call. Next, select your trade direction, buy or sell, specify your order size, and input your order price. You can also specify your order based on implied volatility, or IV, which is the expected volatility of the option. Under IV, specify the amount of implied volatility desired for your position. The platform will display all option Greeks of the order, including Gamma, Theta, Delta, and Vega. Once you're ready, click Place Order to bring up a final confirmation window. Do a final check before confirming. And that's it. It's that simple. You are now ready to place your first options order with us.
Welcome back. We'll now move into the final panel discussion today on options versus perpetual, which is more useful in crypto trading. Joining us in the panel discussion, we have Clement, CEO and co-founder of Darley Technologies. His expertise lies in the field of options market making. Prior to Darley Technologies, Clement worked at IMC Trading and APT Capital. Joining us as the second speaker of the panel today, we have Katrina, Director of BD and Partnerships at Wintermute. Before joining Wintermute, Katrina was VP of Global Link Execution Services at State Street and Head of BD at EXP Capital. Prior to that, Katrina worked in FICC sales and trading at Credit Suisse and UBS. Lastly, joining us as a speaker in the panel, we have Greg, Director of Derivatives at Ember Data and the former co-founder of Genesis Volatility. Greg has 13 years of trading experience. He was previously a prop trader at SMB Capital and Chopper Trading, DRW. Greg started full-time crypto trading in 2015. Moderating this session, we have Shun back with us. Over to you, Shun.
Thank you, Gladys. Yeah, so for now, we will move on to the session 3 of today's segment. Welcome our guest. So this segment was originally an options versus perpetual kinds of discussion panel, like a debate. But I realized that everyone is actually on the option side. Yeah, we do not have the proponents of perpetual. So instead, we will convert this to a panel discussion whereby I will give a topic and then everyone will just discuss. So the first topic we have for today is we want to talk about the risk of options and perpetual to traders. What's the risk to them? And we want to also go into the actual liquidation process. Like maybe we can talk a bit about the technicalities of the liquidation process. Yeah. So first, maybe I can open to the floor to see who has something to. Maybe can we start from Clement? Do you have some thoughts on this topic?
So options versus perpetual or the new ones?
So what to the trader, what is the risk of between options and perpetual? Like if I am a newbie trader, maybe the reason that I am not using options is because I might lose more money than what I put in, for example, or I might lose my money faster than if I were to do 20x. Yeah.
So I think perpetual definitely has the risk of liquidation in the sense that it's usually product used to be leveraged. And options, as I would say, on the other side, a risk which is often the fact that people do not necessarily understand everything regarding options. Now, if you take the risk of options in itself, if you buy options, you cannot lose more than what you've paid for it, right? Because you can only earn money at expiry time. And so in this sense, options, because it's an insurance product, unless you start selling some, you can't lose money. So the maximum loss is clearly defined. And the only moment where it can probably go wrong is in case you have leverage on options. So you can buy options on margin, for example. But it's probably not the first topic I will talk about, right? So if we just limit ourselves to the raw definition of an option product, it has much more freedom than perpetuals. It's an insurance product. It's safe in terms of market risk, but less so in terms of how deep people understand these products.
I got something I want to add to this. So,
yes, please.
So one of the things that I think can really get out of hand when you're options trading is that your profile of risk changes. So perpetuals and futures have linear risk profiles, which are a lot easier to manage. So sort of as what Clement had already said, is that sometimes people don't quite understand how these risk profiles will change. So if you think about like short-term options where gamma can be extremely high when we're near the money, something that will happen is your option is 10% of the money one day till expiration. The underlying moves a little bit. Your option doesn't change at all. So if you're short an option, you're thinking you're fine. Then we get at the money and then we get slightly into money. And all of a sudden your Greek profile goes from 0 delta to 100 delta. and now you have a linear perpetual. And so one of the problems that happens a lot with newer traders is that they think they're selling out of the money options. Everything's fine. They maybe sell 4 or 5 contracts where they would do like one perpetual contract instead. And then all of a sudden implied volatility goes up, and then their options become at the money essentially because vol has gone up a lot. And now their risk profile has changed a lot, and they have 5 or 10 perpetuals instead of what it would have as one in terms of equivalent risk.
Thank you, Greg. Sorry, Clement, for mispronouncing your name. Can I also invite Katrina to share with us some thoughts on this?
Yeah, I guess from our side, I mean, we are one of the market makers in both perps, options, and spot, primarily spot. We do have a options desk. So the way that we look at it from a market making perspective is that in order to, efficiently trade options, you need to have quite liquid Delta One products, right, to be available. And that's quite often can be a challenge, especially, for those markets where it's not sufficient. So even when we try to hedge in Delta products, sometimes we have to skew positions very, very, very kind of, tiny amounts basically to hedge. In terms of looking at it from a retail perspective, my background is in FX, so I think crypto kind of creation of perps is a very new concept as such. Again, in traditional finance, if you wanted to get an exposure, you just would trade options, right? You can't really access an institutional exchange like CME or CBOR to trade that, right, in large clips. So again, you have limitations both for futures and options. So perps in a way gives you the access to leverage, and a lot of my friends who have never even worked in financial markets do trade crypto perps and get very quickly liquidated. So I think it's a little bit kind of different markets to consider, and they have completely 2 different mechanisms, right? So the perps and the options, so they cater for very, very different segments as such. On our side, we obviously use perps for hedging everything we trade on spot, as well as hedge our options book exposure. So I would say, yeah, it's very different in terms of payout structure as well as characteristics.
Thank you, Katrina, for sharing. The next topic that I have is so when to choose between perpetual and options. So, for example, if I'm a layman, like if I am very sure that Bitcoin is gonna move from 10,000 to 30,000 next day, I personally would just buy spot because I do not know about derivatives, I do not know about options. But for our guest tonight, which tool would you use? Would you be using options, or would you be using perpetuals if you are very sure of imminent movement? Maybe can I get Clement to share with us first?
Yeah, so if you just think that the movement will be up, right? Potentially you can expose yourself to a movement up with perpetuals, but you can also do it with options, right? I mean, at the end of the day, if you buy a call and sell a put, you anyway have a future which has a kind of similar payoff as a perpetual with just a specified maturity. So you can replicate the payoff of your perpetuals with options. I think the only thing you have with options is more freedom, right? Because you can decide, instead of having something which is like just a straight line, you can say, hey, you know what, I have a payoff which starts being, non-linear, right? You can say, hey, I just want a call spread between, I don't know, 20K and 30K, so I will only make money if the BTC ends up between 20 and 30K. So you can add way more freedom and you can express yourself with more accuracy with options. The downside of options is because there are way more products, because it's per strikes, per maturity. The liquidity is a bit thinner, right? So you can't get the same sizes. It's indeed, as Grégoire explained, it's a lot more complicated to manage your positions. People look at the Greeks, the risks they have. So free options is freedom. You can do more. If you have a view which is just more than, I think it should go up, use options. If you just want something simple and say, yeah, well, it goes up, buy perpetuals. It will make your life easier.
Okay, thank you, Clement. Sounds like it's an art. Like when you deal with options, you become an artist. Yeah, can I also get some insights from Greg?
Okay.
To your point, so the example that you described is very much a delta bias. And so in that way, maybe you just keep it simple and you use the perp. the beauty of options, which kind of you alluded to, is that there's a little bit of an art to it in the sense that there's kind of different bets that you can make too. You can bet on time, you can bet on implied volatility. And so ultimately that's what's interesting about options, is having sort of these different views on the Greeks of your potential options position. So something that has a bias beyond just delta, that's when using options makes sense.
Okay, thank you, Greg. For Katrina, like if you were to do it like personally, I mean, like of course you are dealing with the company, but if you were to do it personally, which one would you choose? Like if you're very sure of the movement.
Well, that's a good question. Yeah, I would agree that probably options provide you more flexibility, as well as you probably don't have the risk of liquidation if the markets are very, very volatile. So you have more control in terms of what strategies you can run. You can, run some more interesting sort of kind of spreads, right? You don't necessarily have to just enter one position. You can do different strategies, a structured derivative. So I think, yeah, you can have different exposure depending on your risk appetite, as opposed to, with perps, where you just have one directional exposure, probably more leverage and can get liquidated much more quickly. So both are still very risky, right? You have to understand both instruments.
Shane, can I add something to the discussion?
Yes, please.
So we talked about perpetuals versus options, but I think we talked briefly about it, but there are also futures, right? Which is just, you get your delta exposure, right? Up or down, right? It's like buying Bitcoin, but with a maturity to it, right? So perpetuals, it's not even one, I mean, it's one-dimensional, but you don't even have the time as a dimension, right? Options, you have the choice of strikes, you have the choice of maturity. Perpetuals, you just have the choice of up or down, but you don't have the choice of maturity. So you can already add futures if you want maturity, and if you need more than maturity, you use options. And I think that's probably a product that some of your customers can consider as well. If they know the time, if they know the time horizon.
Thank you, Clement. So as a newbie, from what I understand from Greg's explanation just now, so it's like it's gonna be a very bad example, but now it's World Cup. So if I know that Team A will win for sure, I would just bet Team A to win. But I could also, if I were to use options instead, I could add on exact score. I could add on who scores first. Yeah, makes me I'll become an artist. Yeah, offers me for more flexibility. So this is what I understood from the insights. Okay, thank you.
Add one more thing to that, because it's an interesting point. So in like modern portfolio theory, having diversified assets kind of reduces your overall risk, and you can isolate edge essentially. And so having opinions on different Greeks essentially allows you to diversify your opinion. So you could have an opinion on timing, an opinion on implied vol, an opinion on delta. You marry all those things together, and essentially, theoretically, you could be wrong on delta and right on the other two, and still make money. And so you're sort of diversifying your overall positioning.
Okay, thank you, Greg. So right now we have, we want to offer some delta to our listeners, right? We want them to make money from options trading. So given that the current market conditions, I mean, it's near to Christmas, it's near to New Year, it's not really moving, and it only moves with like FOMC or CPI. So in this very, let me think of the word, in these very terrible market conditions, what kind of strategies or what kind of advice would you offer to the listeners? How should they make money by using options or a combination of tools? I mean, of course, the best way is to just stop trading and go on holiday. Yeah, but since we are on the options on the topic of options today, we want to offer some advice for the listeners. And everyone has different strategies. Maybe can we start from Katrina? Like, if you have some advice for the listeners.
Well, no, definitely don't have any financial advice for the listeners. I think actually a lot of their counterparties. I can only speak from the OTC institutional perspective, because I think anyone participating in retail business, or in retail trading on perpetuals or options, have to be warned that you can lose a lot, right? So maybe on the option side you have limitation that is only your premium, and perhaps it can be much higher. But overall, what we are seeing, and I would say that's a trend that we are noticing, is that there's definitely more interest in in the derivatives market, more from the institutional participation, because retails have been burned, and those who are still staying, many of them are very kind of philosophically aligned to participate in DeFi. So we see them holding spot and holding the actual underlying, rather than kind of trying to run different strategies. So yeah, sorry to disappoint you there, but yeah, definitely don't have any advice on trading perps or options, especially if you're a retail user. And I think again, I believe in the UK, and our company corporate in the UK, we have an FCA registration, so we are very much familiar to all those big warnings for retail users that your capital might be at loss. So I think that's kind of the message I want to convey today for retail specifically.
Okay, thank you, Katrina. Could we get some alpha from Clement, please?
Yeah, I'm not going to give alpha as such, but I can give people indication on how to place their money where their mouth is, right? And indeed, you mentioned that for Christmas, often it's a bit more quiet. So if you think that it will be quieter than people anticipate, you can indeed sell options in this case, If you think the Bitcoin will never reach 40K by December, you can sell some calls on 40K. And on top of it, if you leave your call and you sell, your coin and you sell a call, you won't be liquidated, right? Because it's anyway covered by your coin. It allows you to gain a yield on your coin. So there are options can definitely allow people to, as I said, to put their money where their mouth is. If you have an opinion, you can realize it. So indeed, one is you can sell volatility, which means selling options if you think it will be quieter than anticipated. In a similar way, you can start earning yields on your coins by selling a call if you hold the coin. Or you could do the opposite and buy options if you think that there might be some unexpected news and it's not priced in the market. Following the FTX events, people might expect some of those things to happen as a consequence of the saga. And in this case, you can buy options to just have an insurance in case it goes wrong. I think that's what I would say.
Thank you, Clement. Yeah, that's that is exactly what I will do tonight. Start to build up the positions. Greg, can I please get you to share something as well?
Yeah, absolutely. So I think there's a couple things. One is just talking about the crypto space in general. One of the most exciting things is that vol events haven't been figured out yet. So ETH 2.0 merge, great example. We have implied vol on dailies going up to like 250, 300%. ETH merge happens overnight. Literally no spot market move at all. Implied vol collapses. We're in this type of new market where like people, if you're looking at equities, everyone knows how earnings work and what earnings happen as terms of like vol events. Everyone knows about non-farm payrolls, CPI, all that stuff. That's just starting to be realized right now in the crypto space. So CPI is being priced in the options market. We're seeing it. Same thing with FOMC. NFP, not so much. And I think these are sort of the vol events, so to speak. Even if it's macro events, that there's opportunities there to essentially study those and make trades around that. So that's the first thing. Another thing that I find really interesting, and it took me a lot of years to figure this out, but this is really how you think about trading options. So, and I'll make an example to spot, but one of the clear examples that kind of newer traders think about is they say implied volatility is low, so I want to buy it, or implied volatility is high, so I want to sell it. You can't just look at it outright. You have to look at it in relation to realized. And actually, implied volatility being low, like as a level, is usually one of the best times to sell vol because it's trading at a huge premium to realized vol. Trading vol is mean reverting. So what happens is that when implied volatility is historically low, people are betting that it's going to go back to the mean at some point. And so what they're doing is they're preempting that event, and they'll often pay a pretty high variance premium over realized vol. And so taking the other side of that paper is usually sort of a good trade. On the flip side, when implied volatility is blowing out, that's actually kind of when it's cheap. So like in this case, FTX vol went crazy and it ended up coming back. But that's the time I would not ever want to sell vol. Even though the vol level is high, it's just because you're in this environment that's justified for it to be high. And the realized vol actually trades above implied in sort of those environments. So that's just kind of something to keep in mind. So when you're trading vol, try to think about, here's a general rule of thumb. The obvious trade has a lot of carry costs to it. And so figure out what the obvious trade is, and usually taking the other side of that paper makes the most sense.
Thank you, Greg. Yeah, by now I'm sure you can tell that I have no idea about options. So I am actually asking questions and sharing my thoughts from the user's point of view, whom I think half are pros and half are non-pros. So options really allows us the flexibility to do what we assume. Like if we assume the situation is gonna be A, then we do options allows us to do what we can to profit from that situation. Right now, I already know that if I were to use perpetuals like 50x or whatever, 100x, and it will always liquidate me before moving in the correct direction. Yeah, so there's no way I can make money, or maybe my leverage is simply just too high. Yeah, and actually on the list, we have a few other topics which were prepared beforehand, but I feel that they are a bit boring. Okay, very dry topics. So I would like to ask, so can you share, like, from the institutional point of view, from the retail point of view, from whatever you can share, can you share with me some success stories that you have seen with probably retail traders who are trading options? They might be your friends, they might be your clients, anonymous, because I can share a lot of stories from people who have profited from perpetuals, like $100 became $1 million or whatever. Yeah, so can we hear some success stories from the option side? Katrina, do you have some stories to share with us?
That's a really, really tricky question. Yeah, I guess it's very much depends on how sophisticated you are. So we're talking retail or institutional?
I would imagine that the data about institutions would be more sensitive. So maybe if you have some retail examples, that would be more easier for you to share.
Yeah, I guess I can try to cover both. So I would say on the institutional side, the trends that we are seeing is obviously, big consideration in the counterparty risk. So we're actually seeing a lot of inflow from large institutions and their interest to trade, similar or kind of equivalent of their perpetuals, i.e., but more in the CFDs format or total return swaps that people are familiar in equities. So that's definitely the way to kind of trade it on the OTC basis. In terms of trading from retail perspective, so we don't cover retail as such, so I wouldn't have much understanding, but I think again you can probably differentiate those who are kind of family office type of setup, or kind of smaller funds who might have sophisticated institutional experience, so they would be able to trade, I guess, in the current market depending on the view, right? They could trade, I don't know, as I mentioned, some spreads. You ask what would be good to trade now during Christmas, possibly some calendar spreads and leveraging on some possible volatility if they expect it, and generate some gain there. Some are if they're holding long, so-called hodlers, they can generate some APY, right? Generate some yield by selling options. So I would say that's more seen as a hedge as opposed to getting the leverage. So when you're looking for leverage, mostly I see some of my friends, for instance, they just trade perps, right? The option seems more complex instrument for them. Those who are more sophisticated obviously can get the benefit from the flexibilities that options can offer.
Thank you, Katrina. Do we have something from Greg, like your friends or some examples that you have seen?
Yeah, I do actually. But let me just jump on your perps example real quick. So you basically never want to trade 100x leverage. And the reason why you don't want to do that is because you're basically always going to get blown out. So think about like just this theoretical example. Imagine there's a trade setup that pays you 1,000 to 1 and you have a 99% probability of winning. Like you'll never find that in the market, but let's just for mental exercise sake. If you kept going in all in every time on that trade, at some point you're gonna lose, and you're gonna lose all your money. So you have to scale your risk appropriately. There's the Kelly criterion ratio, which essentially, if you know your edge, you can figure out what's the right scaling mechanism to isolate the maximum edge while ensuring that you don't go bankrupt. So those types of sizing mechanisms are going to be really important to your sort of long-term success as a trader. As far as like big wins, so one of the best traders I know, actually I met him at QCP Capital, and he actually started with a $20 poker account, won all the way to $10,000, and then started a trading account, basically just trading Delta One products. He's not an options trader, just Delta One products, and now he has a multi-million-dollar account from trading Delta One. And so he was a day trader, and he still is, and that's what he does for a living, and he's really good, and he's probably the best trader I know. One of the great things about prop trading is that you're surrounded by a lot of successful traders. Helps with your mindset a lot, and helps a lot to talk to other people to see what they're doing and bouncing off ideas. If there's any advice that I would do, is like find some other traders to trade with, so you're not just isolated in your own ideas, and you can sort of stress test them with other people before putting them in the market.
Okay, thank you, Greg. Clement, hope we can listen to your success stories.
Yeah, actually, I have one, but I will first emphasize indeed that it's not financial advice at all. So I remember a bit before the bull run that I had a friend, and the great thing of options is as opposed to perpetuals, when you don't know the funding rate, and there is still some unknowns, right, with the perpetuals, because depending on the exchange, the funding rate is updated every 8 hours or more frequently. And he said, yeah, well, you know what, I think the Bitcoin will just double, and I'm pretty sure of it in 1 year from now. So he bought a lot of calls that were like very out of the money, and that's something you cannot easily do with perpetuals, right? Because you will as well make money if it just goes up 50%, right? While with the options, you can just bet on really something which is a bit more unique, if you have a specific view. We often hear people saying, Bitcoin will go to the moon. And he did that. He just bought a lot of calls that were like twice the current price 1 year from now, and became very rich thanks to it. But it's a success story, but it's more a bet. Sometimes you bet something with friends, and it's money that you have to be ready to lose. It's more like I really think that let's give it a shot, but it shouldn't be more than that. Don't bet your life savings on such a thing. But I think that's the great thing that some people can do with options. It's like a lottery in which the rate of return is much higher than the national lottery, right? Because the fees are not that high, so you can bet on events like this, twice the value of Bitcoin 1 year from now.
Thank you, Clement. So actually, with regards to that, I have a very good strategy. So I understand that if you do 100x, if you always go all in, you will go broke, right? So the strategy is to wait for the next paycheck to come in. Yeah, so that's what I'm doing. Okay, just wait for the next paycheck to come in. Okay, and that we have another last topic. So basically, we hope to discuss about the correlation between the traditional markets and the crypto markets. And I think it's a widely discussed topic, but how can options help us to really profit from this? For example, if I think that the stock market is going to crash due to the bond bubble or whatever, due to there being some kind of a 2008 financial crisis, upcoming, not happening yet, but upcoming. So how can we position ourselves by using crypto options to really grab hold of this opportunity? Maybe can I get Katrina to share something with us?
Yeah, that's. I started my career on the CDS desk in 2008, right? So I've survived the 2008 crisis, and I was in FX in January 2018 when S&P has removed the Swissy peg. So I think there's some of those kind of black swan events that you possibly can't prepare for. However, if you're expecting some, so there's again depends on your longevity, as you said. If you live, from paycheck to paycheck, it's a very short-term view, right? If you're looking to benefit from the volatility, then of course you can, do some strategies. But from our observation, obviously crypto is now much more correlated to the macro environment, right? Unlike previously and unlike before. So you wouldn't necessarily say as before, that BTC is a store of value. I think that's concept long gone. So it very much moves in line with the market. You have to listen to all the big calendar announcements and keep in line. So it very much relies on the source of data that you have, right? And as well as kind of being very, very well informed. But again, going from an institutional perspective, because we are always delta neutral, so we don't really run any alpha strategies, because we look at it as a zero-sum game. There's always someone arbing us or someone on the other side losing it out. So that's why our perspective is kind of very short, very quick, instant hedging for all our, literally all our trading. So I would say that's our approach, which is probably quite cautious, but it seems to be very important from a risk management perspective, capital protection, and generally, managing our business.
Thank you, Katrina. Greg, could we get your views on this as well?
I actually don't really have anything to add to this. I think there's a bunch of structures you can do, and it's just going to depend on how the market's being priced when you want to do that structure.
Okay, Clement, do you have anything to add?
Yeah, I mean, if you think the market will crash, we talked about the volatility being very low currently in the markets, right? So if you think there will be a huge crash, then it means a lot of volatility. When it goes down a lot, there is a lot of volatility. So if you have the fear that it might crash, then the thing to do is to buy puts. Right? That's how you will translate your view into an option strategy.
That answer is very, very clear. Like, I mean, I was actually looking for a very some answer that I personally would understand, and I totally understood that yeah, buy some puts, because I always believe that something is on the horizon waiting for it to happen.
Yeah.
Like we had, all these incidents. There's gonna be one more. Maybe we can have a good Christmas, and right after that we have another huge incident. Yeah, so that's what I'm looking forward to. Yeah.
No, and as well, one huge point as well is that there is always the question of, do you want to make money? And the question is always about will you increase the money you have on your bank account? But it's a question of, describing options as an insurance product means also you buy peace. If you buy some puts to cover your portfolio and say, hey, if it goes down a lot, my coins won't be worth nothing. You sleep quietly, and you will pass a great Christmas, because whatever happens, you will be fine. Or if there is indeed a huge market crash next year, you will be fine. So sometimes you buy as well some peace of mind, if you want.
As a closing statement to our listeners of this live stream, Clement, do you have some closing statement? I assume that there will be some people who know about options, some who are totally new, and some who are like professionals. Yeah, do you have a closing statement?
Yeah, I think options is a fascinating field, right? So I invite people to just learn about how it works, what you can do with it, and indeed become your own artist, become creative. You can do that with options. So learn about it, and then you will see it will expand your horizons and your ability to do like quality trading, or at least trading that matches your views. Yeah.
Thank you. Could you also get a closing statement from Greg as well?
Yeah, absolutely. So I would say for people who are looking to get into trading, like the number one rule is you have to love trading. And the reason why I say that, it's because it's an all-encompassing endeavor, and there's a lot of levels to it. So there's a level where you're learning about the market and you're doing trades. Then you're learning the instruments, which takes a long time. You're learning how to price them. At some point, you got to learn statistics if you can trade options. And you got to learn coding to do back tests and stuff like that. So there's a lot of different levels to it. You absolutely have to be in love with it, because also trading is like, a martial arts bout. You're going to get kicked in the face sometimes. And so you have to be able to get back on your feet, and you're not going to be able to do that if you don't love it. And the other people you're trading against probably do love it. So that's just something to keep in mind. You have to really like it. You're not going to make quick, easy money. And if you do, you're probably going to lose it.
Okay, thank you. Last but not least, can we also have a closing statement from Katrina?
Yeah, I guess for the retail users, I would say that it's all about risk reward profile, right? So it's always there's capital at risk, but again, I think education is very important, and you guys seem to be doing a good job in that. So again, if someone is very passionate about crypto industry as such, but they know it's a long bear run, maybe there's a way they can learn about running some bear put spreads and being able to generate some low risk profits. In terms of the institutional players who are already very sophisticated, again, I guess what is important to consider is the liquidity and the execution, as well as kind of availability of different structures, even more bespoke possibly than what exchanges can offer, and that's where OTC desk can be helpful, like ourselves. So yeah, it's two completely different messages, but other than that, happy holidays.
Okay, happy holidays. Thank you, Clement. Thank you, Greg. Thank you, Katrina, for tonight. I am Shun from Bybit. I handle the Japanese market, basically. Yeah. So with that, I will pass the mic over to Gladys, our host.
Thank you, Katrina, Gray, and Clement for your insights. And I'm sorry if I pronounced your name wrong again, Clement. And also thank you, Shun, for moderating. This was another very informative session, and we have all benefited greatly from your sharing of experiences. Before ending off, we have Hao from Bybit, who would like to say a few words for us.
Hi. So thanks, guys, for joining today's panel. I think we have covered a wide range of different topics, mostly of covering the difference between perpetuals and options and how options can grow. As the head of options, I'm really, really enthusiastic about all the things and the product we have built, and the pace we are moving ahead, and the overall contribution we can and we are going to make to this ecosystem. This is not the easiest time for any of us. The credibility and trustworthiness is severely damaged by the recent events. But regardless, it is always a long and grueling path to build trust and to move crypto into the mass adoption. I sincerely believe what we are building here at Bybit and what we are building here in this crypto ecosystem can add value to the real world economy and can bring more people more freedom. We will press on. We will continue to polish our products. We will keep doing what we have been doing. We will stay true to our mission, be the crypto arc. And hopefully we will carry our users, our clients, our collaborators, co-builders out of this winter. And hopefully we will see the crypto dream fulfilled in the next year or in the near future. Thanks, guys. Back to you, Gladius.
Sorry, I muted myself again. Thank you, Hal, for sharing Bybit's message. We would also like to extend our appreciation to all of our speakers for sharing their experiences, knowledge, and thoughts. Thank you as well to all of our viewers online for joining us today. We hope it was useful. Make sure to subscribe to our channel on YouTube and follow us on Twitter to stay updated. It's Bybit's 4th birthday this month, and we have prepared lots of exciting events for our users. You'll find more details on our social platforms. Have a good day.